Let's cut the crap. This is a yo-yo market. We're going up, we're going down. Many creators are saying there's an urgent warning, or sell, or buy. Well, what do you actually do in this market? Well, I want to take my time and explain exactly how to navigate this market in the simplest way possible for the next 20 minutes. I want to tell you strategies that are going to work and how to make money in an uncertain environment. I respect your time, so here is a summary of what I'm going to cover in this video. Number 1, when to enter into stocks and options. 2, which option strategies to use right now. 3, my real thoughts on Palantir, NVDA, and Tesla. 4, why analysts, YouTubers are lying to you, and doing less is more. Number 5, my portfolio results for the past week and month, and trades that I'm making and plan to make soon. No need to watch 20-minute videos every single day on the news. I'm going to break everything down. This is going to be the best investment of time that you can make, because this video is going to make it super simple for navigating the market without having to spend countless hours watching videos. In between, I'll give you some examples, some analogies. Maybe we'll have a couple of laughs, and we're going to learn a lot. I don't care about views or likes. You don't need to smash nothing or do anything. I did launch a retirement sale for a boot camp, which you can check out in the first link in the description. Totally up to you, and I'll talk a little bit more about that later. Yes, YouTubers make money from views, but this video is super algorithm not friendly, because I want to be brutally honest with how you can make money, and the views don't matter. So let's get into the video. So check this out. This is market cycles, hypothetical growth of 10,000 invested in the S&P 500 index from 1950 to 2024. If you'll notice here, we've mainly been in bull markets, and the bear markets are in yellow. So the yellow portions are very small, whereas the blue portions are very big. And the simple conclusion here, being a bear is one of the worst things that you can do, especially how hard market timing is. Now, actually, professional fund managers fail all the time. The majority of professional fund managers who are paid, by the way, to time the market, they fail to beat it. And over the past 15 years, over 87% of actively managed large cap mutual funds underperformed the S&P 500. Missing just a few of the best days in the market drastically reduces your returns. So here's some proof in numbers. From 2002 to 2022, this 20-year period that was studied, the S&P 500 returned 9.76% annually. Missing the 10 best days dropped to 5.33%. So 10 days basically drops to in half, even though this is a 20-year period. That is absolutely wild. Now, missing the best 20 days drops your return another basically half to 2.63%. And missing the best 30 days resulted in negative results. Let's be honest with ourselves. When we watch videos on YouTube and we're trying to predict the market, and you might be a beginner, you're thinking to yourself, how do I outperform? But the problem is, when you're trying to time the market and trying to get in and get out, that's the formula for losing. Now I'm going to talk about the formula for winning now. But first, I want to sum up every single market crash video into one sentence. Regardless of events, economics, politics, and rumors, the best time to invest and to enter into stocks is today. The second best is tomorrow. News is purely there to make money and to monetize. And again, this doesn't really look good, but I'm giving you the brutal, honest truth of how YouTube, the news, social media works. You will do far better by being a bull long-term and by having a long-term mindset without trying to time the market. And there isn't a single person that actually knows, other than Nancy Pelosi, because she does have information that's not really public. And more data I want to give you is, since 1926, every single rolling 20-year period of the S&P 500 has delivered positive returns, regardless of recessions, wars, crashes, or pandemics. So when we talk about Palantir and Tesla and NVIDIA and other stocks in this video, and I show you my portfolio, you will notice that I'm bullish, I've been bullish, and I'm always going to be bullish, because after studying finance, working at 3 different jobs, worked at Group 1 Trading, Goldman Sachs, and PNC Capital Advisors, had a couple of other jobs that were like more so internships as well. And being a bull is the best thing that you can do to make money. All right. So even if you ended up investing in the Great Depression of like 1929, you would still be profitable in 1949. So it just comes to show you the 2 most important concepts, which I'm giving you in this video, is timing is bad. All rolling periods are successful. Missing the best days of any decade dramatically reduces results. These are all reasons to not even watch the news, to not even try to be a crazy stock picker. This is all reason to stay invested in just high quality companies and not go into the micro strategies and the Mara and the Riot and these Bitcoin derivatives, right? Basically these companies that make their money off that, or MicroStrategy. Those are crap, okay? Rivian is crap, Nicholas crap. When you see my portfolio, I only have high quality companies. And then I'll talk about the option strategies. So one last thing before option strategies. I'm perma bullish and timing the market is for gamblers. Being bearish and scared is normal, but definitely suboptimal. So the conclusion for the first phase of this video is being a bull and having a long-term view is the way to go. Let's go into the second portion, which is strategies. Now, something that I want to show you, this is an article from Goldman Sachs, and you will see here that this is essentially how put selling works. So you guys know, put selling is my favorite strategy. It's my top 3 strategy. Selling puts lets you buy stocks for cheaper than the market is trading at. And option trading is safer than stock trading if you know what you're doing. And that's why I've been trading options for over 10 years. So check it out. This gray bar is S&P 500 total return. And this bar right next to it is basically S&P 500 offers the same returns as equities, and it has lower drawdown risk, okay? AKA, selling put options is superior to being invested in the stock market because it has lower risk and higher return. Both of those are true. And especially in 2008, when the market pulls back a lot. And again, I don't know what market we're in right now. This is a yo-yo market. There's a lot of choppiness, okay? And I'm gonna continue to be bullish. And I'm trying to point out that selling put options is the 180 IQ move that you can do. All right, so let's talk about what strategies that you can use right now. You want to master put selling. 2008, put selling was a great idea. Here's 18 seconds on why you want to do it.
Why would anyone want to sell put options? The key reason is the premium income. Selling put options is one of the few strategies in the stock market that allows you to generate income consistently without having to wait for the stock price to go up. The premium income is immediate. You receive it at the moment that you sell the option contract.
Okay, no fluff, no crap, keeping it to the point. The best delta is going to be a 30 delta to sell put options. That's the sweet spot. Now, why is it 30 delta and why not 35 or 25? Selling out of the money options is profitable. It's a fact. I've studied it for countless years, and I'm not the only one. A lot of people on YouTube talk about selling options. Selling options works because options are overpriced. A professor of mine said that basically hedge funds, pension funds, a lot of them have mandates or they just simply want to hedge their risk and they want to buy put options. When they buy put options, they end up saving. When they buy put options, they're trying to protect themselves. However, because they have so much money, they end up inflating the price of options in general, both buying put options and call options as well. There's also something called the risk premium. So there's some risk premium because people are buying options to protect themselves or gambling with them to get huge returns, and sellers need to be compensated for that. So that's why options are profitable. Here's a quote inspired by Alec Baldwin, an iconic line. So ABC, always be selling. And this is from Glenn Ross in 1992. It's a movie, right? ABC. For me, what ABC means is always be selling put contracts. ABC. Always be selling contracts, put contracts. Guys, ABC is what will make you wealthy. ABC beats the news. It beats watching countless YouTube videos. Literally selling puts on high quality companies, and we'll go over some examples, is the way to go. And guess what? If you get assigned, good. Congratulations. Okay? Congratulations. You bought a stock for less than what you paid or would have paid to buy the stock had you not sold the put option, okay? We'll talk about that in a moment and what that looks like. But as soon as you get assigned, that's a good thing. Now that you have a stock that you chose to get into and that you want to own, now all you have to do is sell a call option to continue the gravy train, to continue the passive income, to continue the cash flow, to continue to lower your average cost. And this is called the wheel or the wheel strategy. And I'm going to leave you a video in the description, or a couple of videos actually that I made on the wheel strategy. Fantastic videos, to the point, with examples. And the wheel strategy is the number one strategy. I said selling puts is the number one strategy, but selling puts is part of the wheel. So they're both the number one strategy. And for efficiency of this video, I'm just going to leave that down in the description, or I'll have it at the end of this video. Let's move on and continue. I mentioned that always being bullish is the way to go, but I also do believe in hedging. Well, what does that mean? A hedge is a protection. A hedge is basically when you're long a lot of stock, you end up hedging by reducing some exposure, by selling some stock, or by selling a position that benefits if the stock does not go up, okay? Hedging your bets. It's like having a little bit in boat one and a little bit of boat two, and you're trying to have these boats sail to new land and you're trying to deliver some goods, okay? Maybe one boat sinks, maybe one boat doesn't get there in time. You have two boats go out, okay? Same location, maybe slightly different navigation that they use, right? Well, maybe one goes a little bit in the safer water, one goes into the faster route with a little bit riskier water. That's how it works, okay? So hedging, you should use 3 to 5% of your portfolio tactical hedging, such as this strategy that I used on NVIDIA 3 weeks ago. It was a bearish play to hedge the stock market volatility. I actually ended up making a lot of money. It's a 40-second clip that's going to change how you think about hedging.
Let's go over NVIDIA put debit spread. A put debit spread would be very protective, and it's going to actually be a little bit cheaper than buying a put option. I prefer put debit spreads because you get to put up less capital up front to get really good protection. So let's go for something like March 21st, which would be really short term. Of course, I'm making this video on the day that NVIDIA has earnings, so you have to keep in mind that the options are going to be more volatile. However, on a put debit spread, the good news is you get to put up so little capital that even high implied volatility doesn't matter too much. It has less of an effect. So let's say that NVIDIA, it reports earnings today. Let's say that you're afraid of NVIDIA going down to $120 per share.
Despite a lot of analysts being bullish, like you guys can see right here, HSBC analyst Ryan Meller, he thinks that NVIDIA is a buy with a price target of 175. But I personally believe that NVIDIA will drop in the short term, and it's likely to be choppy. Like going from 130 to 120 can absolutely happen. But by March 26th, the stock can fall to 120, or honestly, it can even be 115. NVIDIA can drop $15 per share in like the next 4 weeks. I'm not sure that's gonna happen, but it's likely to happen. So what you wanna do is you wanna do this put debit spread to profit because NVIDIA is likely to be choppy. I'm very certain it will experience volatility, and I am bullish on NVIDIA long term, don't get me wrong. I just think March is going to have a pullback, and we might see NVIDIA go down to 120 per share or even 115 per share, in my opinion.
So if you're afraid of the stock falling down by $10, here's what you can do. You can essentially buy a put option just like you would, but this strategy is going to be a spread. So what I would do is I would buy a put option and then you would sell another put option. So you're buying one put option just like a long put option that protects you, but now you're selling the other put option to reduce your cost. As you can see here, you're buying one put option for $130. That's the strike price, and you're paying $885 for it. However, now if I end up selling a $120 put option, I can collect $470 for it. So I get a total benefit myself as NVIDIA falls down from 130 to 120. If NVIDIA goes up, you'll be out the total cost here of $410. If NVIDIA ends up staying the same, you're still going to lose the premium. Now, if NVIDIA goes down to 120, you have a total benefit of $10 from 130 down to 120. You're paying $4 for this. Keep in mind, earnings is today, which means that NVIDIA may have a huge move. So you're paying $4 to make $10 and you're protecting yourself.
It's pretty wild how spot on I was with NVIDIA weakness. It ended up saving me a lot of money by doing a put debit spread. Now, using put debit spreads is a really smart way to hedge your portfolio. And remember, a lot of these high-flying stocks like Tesla, NVIDIA, they have a lot of volatility. And sometimes you can spot when they're just expensive or more volatility is likely to come. And I believe that 3 to 5% of your portfolio can be in a hedged position or a bearish position like a put debit spread. And in this example, it ended up paying off extremely well, going from $4 to $10, although I didn't do too many contracts. So here's my real thoughts on Palantir, NVIDIA, and Tesla. And let's move over to our next portion where I talk about these three stocks specifically, as I've been covering them for a very long time, and then also going over my portfolio in greater detail. NVIDIA was a genius hedge, but now due to the yo-yo effect of the market, where the market just keeps going up and down, I basically thought that NVIDIA is going to go from 130 down to like 120, 115. NVIDIA ended up going down even below 115, so it surprised me on the downside. And hedging it was basically a genius move, but I could have hedged it even more. I don't currently have any NVIDIA shares, and my Discord community knows that I am light on Tesla, NVIDIA, and those two stocks I think have experienced a lot of volatility. And I'm actively looking to get back into these stocks now because I have not had the capital. I've invested a lot of my capital, as you'll see later on when I cover my portfolio. I've been light and I've invested my capital elsewhere. And now I'm actively looking to get back in because I think that after 1 month performance of NVIDIA basically being down 11.5%, I think the support is probably around 105, the 105 level. So I'm actively looking to get back into NVIDIA. For Palantir, I plan to make a video and talk about the resilience Palantir is showing. And Palantir has actually been a really good stock to own. And the recovery is very strong on Palantir, as is on Tesla. On NVIDIA, not so much. Talk about Tesla, it has had a huge recovery as well. Although in late March, I still don't think that Tesla is going to reach $300 per share, at least for a couple of months. Now, with that being said, I'm actively looking to get into NVIDIA and buy shares. Tesla, the same. However, I prefer to sell put options to get into Tesla cheaper. I want it at 250. I don't really want to buy it for over 250. So the only thing I'm going to do is sell puts when I have capital available, which I don't at the moment. And then number 3, dollar cost averaging into Palantir, NVIDIA, and Tesla is a good idea regardless, because again, we can't predict the stock market. We can't predict these single stocks, and we can do our best, but still long-term investing, dollar cost averaging is the best. And also I want to point out that dollar cost averaging is what it means is both buying shares of stock and selling put options, okay? When you sell a put option, you are agreeing to buy the stock at a lower price gradually over time. The crazy thing is selling puts is dollar cost averaging because when you sell a cash secured put, you're willing to buy the stock at a strike price if you're assigned, okay? Each put is like a conditional buy order. But this buy order is where you get paid upfront cash. So you're essentially dollar cost averaging, getting paid to dollar cost average, which is why selling puts is the #1 strategy ever. And if you're assigned, you buy the stock at a discount. So the strike price minus the premium that you received, that's going to be less than the current stock price. It's always going to be less because you get paid premium to do a sell put. So if you're not assigned, you just keep the premium. You keep it either way, but you get to keep the premium and you can just repeat the process and basically do it again, which is why it's super powerful for like cash flow and for income. Now, you're slowly acquiring shares on dip rather than buying lump sum amounts when you're selling put options. So rather than like buying a whole lot of shares, selling put options means that you get to acquire the stock at that price that you choose. You can sell multiple different strikes. So like on NVIDIA, you can sell a 110, like let's go to trade NVIDIA options. You can sell multiple different strikes. You can also sell multiple different expirations. This is exactly actually what Goldman Sachs does. Like they put their clients in safer strategies that are spread across time. So for example, like you can sell, let's say I go to April 17, like you can easily sell, let's look at the 108, 30 delta, perfect. So just, you can sell a April 17th, 108. Then you can go to a different expiration like May 16th, okay, the third Friday, the traditional expiration. And then you can sell like 105, okay? The 105 here has a 28 delta, but it has more premium because there's more time. You can sell a 108, you can sell a 105. Honestly, like I believe in NVIDIA long-term. You can even go to January and sell like long-term leap options, but leap put options. So let's say, and I'm playing around with this, I'm just trying to teach you everything that I know in like the shortest amount of time possible and give you tons of value. You can even sell in the money. So you can go for like a 115. Here, this has like a 40 delta, it's a bit higher, but the premium is like super juicy. And if NVIDIA goes up to like 116, then all of these options expire worthless, right? So this is a really good way to dollar cost average and get more shares for lower cost and get paid to do so. Now, real quick, talking about what analysts and how they're lying to you. I don't believe the news has your best intentions. I also don't believe YouTubers or social media has the best intention. The best way to actually be profitable is to do less. I really want to encourage simplicity. And like, if you look at news and YouTubers, they're not really trading for money. They're making content for money and getting your attention for clicks. So the market really doesn't reward activity. It rewards patience. So by having patience in doing less, you're likely to have a higher rate of return rather than doing more, because actively trading obviously makes news more exciting. YouTubers get views and clicks, and brokerages are also like, they like more activity. Robinhood isn't free. When you're trading on Robinhood, you're still paying fees. You just don't understand that you're paying fees because the bid and ask spread is a fee in itself. Okay, so although it's commission free, it's still fees. And don't get me wrong, I like using Robinhood, but I'm just letting you know that simplicity beats activity. Patience rewards you more than short-term day trading and swing trading and weekly trading. I prefer just simplicity. Real traders aren't glued to their screen all day. They're not chasing 10 indicators. Simplicity, again, will beat 10 indicators. So with that being said, I'm just gonna call it a load of bull schnitzel, okay? And by the way, institutions act before the news. So watching the news is like reading yesterday's weather and trying to decide if you're gonna use an umbrella today. So believe me, the news doesn't really want you to be rich, okay? The only person, this is the harsh truth, that is kind of harsh, but friends, family, the only person that will want you to get rich is you, okay? You need to get rich, which means you need to get educated, knowledgeable on what actually works, and cut through the BS online, all right? So focus on option strategies that produce income. Selling puts, covered calls, the wheel strategy. These are the only 3 strategies that you basically need, although the put debit spread that I showed you in this video is tremendous, 3 to 5% of your portfolio. There's other successful strategies that are a little bit more complicated that you don't necessarily need. So look, last but not least, I mentioned my first link in the description has a bootcamp and a course that I just created. This is a program that I've created as I'm retiring off of probably coaching in the next 1 year and wrapping things up in 2025, as I've had a really successful career trading and investing. And I've combined everything that I know into one program, and I'm also going to have 3 live sessions. Now, I talk about why I'm doing this and the purpose for it and why I spent 2 weeks and have hired lots of editing to make this the best program ever for understanding the foundation, the beginner aspects of trading, as well as the more advanced topic. Because my goal was to help you navigate the market, and I've combined everything that I know into one easy program. There's a 9-minute video if you're interested in that. It's the first link in the description right now. This is for a limited time. I've never done this. This is kind of like a 5-year retirement sale that I'm doing. And I thought this would be a really interesting project to really dedicate myself to. So anyways, all you really need is simplicity. You don't need anything from me or anyone else, but if you want to check that out, go for it. And at the end of the day, simplicity, long-term investing, and timing the market makes no sense. Just be a long-term bull. Hope that you enjoy this more raw style of me making my videos. So whatever your feedback is, drop it in the comments down below. I do read comments, and I'll see you guys in the next video.